Ian Levine. I live here in Boston, Massachusetts, and these days I run one of two people running Launchpad Venture Group, which is the largest angel network group in New England and one of the 5 or 10 largest in the United States.
Wow. Okay. Lot to dig into there. How did you find yourself, running this investment group?
Well, I can go way to the Wayback Machine and sort of say I
Sure.
started in corporate America, with a sales job back in the late 80s, and then kind of worked my way up to management of some public companies and private equity owned companies. And then along the way, I came up with an idea for a SaaS startup and kind of incubated that on the side. And I just got the hunger and the interest for the startup world. And lo and behold, about 20 years ago, I started aggressively what they call angel investing, and that sort of kept growing and ended up at Launchpad 7 years ago and got tapped to help run the group about 3 years ago.
hmm Nice, nice. What was it about Launchpad that attracted you?
So Launchpad itself was an interesting development. I was already syndicating my own deals amongst high net worth people that were in my network. And so I was already doing, sourcing and structuring of deals, and we were having some pretty good success with my network. And I was looking for more deal flow. And by chance, I had been on a board maybe 18 years ago with the founder of Launchpad, and I got reconnected, and he explained to me what he was doing and what Launchpad really was. Wasn't that aware. This is 7 years ago or so. And they invited me to come sit in on some meetings. And after sitting on some meetings, I was like, this is exactly where I need to be. I was in a room with a lot of smart people. I had entered the room with a lot of hubris about thinking I knew a lot about business and a lot about investing and had some successes to back up my hubris. And I was just humbled by the questions people were asking, the depth of knowledge they had from their own business experiences, and the way they could pull the covers back on businesses and see around corners that I hadn't even thought of. So it just became that this feels like a great place.
hmm Awesome, awesome. Um, so I mean, so many amazing places we can go from here. So, what did you learn in your own sort of direct firsthand experience running startups that helps you in this role?
Well, it's really tricky to take something from ideation to let's put a product out there, find your early product, customers, and then scale, and then eventually exit. That's kind of the linear thinking of a startup. And so I actually got really energized by just identifying a problem, ideating on a solution, and getting fortunate enough that actually the company that I was with at the time said, "We'll back you, but we don't want this inside our company. And you can use our company as a core distribution channel." So I had these pillars of jump starting my first startup idea that most entrepreneurs don't have. And I just got such a charge out of it, like from sitting down to with some developers at the time. This is going back to the mid 90s, and laying out my vision for what should be fairly easy to do with software code. I wasn't a coder, so it was like, here's this guy that sees a business problem, says, I know this can be coded. Let's go code it. And then, my job from there was helping find some of the initial customers to prove out the thesis, and that worked really well. And scaled that first business to over 100 customers. And the energy from a startup was entirely different than anything I'd ever experienced in big corporate America, having worked for companies with thousands of employees.
hmm was that a tough adjustment going from potentially a fairly feasible work life balance to maybe you know working nights and weekends as well?
Yeah, so the work ethic was not an issue. I was ready to put in a lot of time. Again, I had a little bit of a cheat compared to most founders that are, just sort of jumping in. They've got to find funding or fund it themselves, and I didn't have to put my own capital at risk for this first venture. And I had the backing of what was called Merrill Corporation out of St. Paul, Minnesota. It was a public company at the time. The CEO was super entrepreneurial person, John Castro. Really, really liked the idea of incubating startups within a bigger company. And so it was his idea to say, let's not do this inside our current company. Let's do it outside the company so you're not inhibited by any of the sort of bureaucracy of a bigger company. And so I didn't have my risk profile wasn't as high as your normal founder. So I have to. So it made life easier. Now I did do a second startup. I'm gonna not be specific on the years. About 7, 8 years later, and that one I fully funded on my own, and that was a lot. That was let's jump off, the edge and see what happens.
Awesome, awesome. Forgive me if you mentioned this and I missed it, but how did you have that specific setup with Merrill?
So I was working for Merrill at the time, and Merrill was doing document workflow, governance, regulatory compliance. It was a public company, probably at the time, six, seven, $800 million in revenue. I don't remember specifically. And I had noticed a real business problem for IR officers and CFOs getting, shareholder information onto the internet, because the internet was really just opening up at that moment, and personal websites like in the original GoDaddy, website builder was being put out there, and there were some, it was really early in the internet days, but I saw this bottleneck of documents and stock quotes and things not happening, and people were still printing documents and mailing them out, and I said, there's no way this is going to continue. And there was a gatekeeper to the to anything that goes on a corporate website, and that was the CTO at that point. And I knew there was ability for a low-code solution. It wasn't called low code back then, but I knew there was a WYSIWYG way we could do this. And so Merrill just basically said, write a business plan, just like you would at in business school, and present it to us. And if we like it, we will fund it, and we will also serve as a distribution channel. And the last thing they said is, if you can find one or two risk takers within our employee base that want to be part of this, you can hire from within. So I was really given a low risk, keys to the kingdom type of perfect scenario for a first time founder. We ended up building the product. I grabbed a couple people from within Merrill. There were a couple people from outside Merrill. And, we scaled to over 100 customers using our service. And, I look back and say, we got Amazon to use it. Amazon was using, this little IR tool that I developed. So I'm like, that's pretty good.
Oh, wow, that's incredible. So what did you learn from that experience that helped you achieve success with your next venture? With sounds like you were completely on your own.
Yeah, well, the second one was I was completely on my own, and if I sort of compare and contrast, it's really the importance of distribution. It's sort of the first company I had the leverage of Merrill's, being a public company, several hundred person sales force, and I had a channel built in immediately, even though I had my own salespeople too. We were having a couple hundred person channel that's motivated for your success really makes a huge difference. When I went out on my own after Merrill for my next startup, I had to do all the selling myself initially, and I didn't have any channels. And, training up other salespeople, getting them, up to speed, giving them enough financial runway if to be successful. Those are costly, timely, investments. And so I never take distribution strategy for granted, because I was able to very quickly in my second startup find 5 customers to sign up, pay me real money. I think I had 75 or $100,000 of revenue in my first 30 days. I'm like, I'm off to the races. Here we go. And then my time was not scalable. I couldn't keep having founder-led sales. So I needed to start leaning on other people to do the selling. And it just wasn't working for me. Even though I had a big background in running go-to-market and in selling and building sales teams and marketing, I had trouble on a tight budget finding the right salespeople that I could train up and make them effective.
Hmm. Got it. Got it. Um, awesome. So, tell me about between that and Launchpad. How did you?
Yeah, so I ended up after, so I started my career at a company called Bowne, then I went to Merrill, and that took me up to the early 2000s and 2 startups. And then I was like, what's next? And ironically, I had my second startup, it was called Outplacement Tools, selling online outplacement services. I had tried to sell it to Iron Mountain, which is a big Fortune 500 Boston company. And the person I tried to sell it to ended up being the hiring HR person for a new role that was, head of strategy and sales operations for a Fortune 500 company based in Boston. I was like, this is spectacular. I want to go do this. And so I reconnected, did that for 4 or 5 years. And that kind of just finished me off on big corporate America. Great company, great people, learned a lot, had a lot of fun there. But I was like, I'm never doing big corporate again coming out of that. And so, I left there, and that's when I started gearing up my angel investing. I'd made a couple angel investments at that point. And I had also syndicated 1 or 2 deals that had been successful at that point. And I ended up making another investment in one called RO Innovation out of Denver, Colorado, and actually got I sucked in would be the wrong word. The CEO approached me to come in and help with sales and marketing to scale. And so I ended up going in there to a small startup. It was like a $2 million business for 2 years. Mind you, I just come out of a multi-billion-dollar Fortune 500, and before that, Merrill had grown into a billion-dollar company. So I was a big company person, and I went in, small sales team, small marketing team, and we quadrupled that business and exited it in a couple of years, and that was just so invigorating and exciting. And while I was doing that, I was also continuing my angel investing, but it was really just struggling for enough quality deal flow that sort of said I need an outlet for more deal flow, and that's why I ended up connecting with Launchpad because they had tremendous muscle and tremendous deal flow in New England.
Hmm. Got it. Got it. So tell me about how you and Launchpad drive deal flow. Um, I mean, you can start when you first started working with them, and maybe if it's changed now.
Sure. So Launchpad, again, it's 175 members, 90% of which are in the New England, New York region. We're very unique in that we're not a fund like a venture capital or most large angel groups today are funds. We literally, at 175 individuals putting their own checks to work in startup businesses. We're also unique in that we only focus on New England and New York. So we're seriously geofenced in a world where almost nobody invests that way anymore. So we have a mission to, help the local ecosystem invest in companies that are near us. So it's fairly unique. And with 175 members, our go-to-market and our ability to fill the top of the funnel is primarily driven by those 175 members, their networks, but also obviously hanging out at the right spots, which are, the MIT Innovation Lab, the Harvard Lab, Cornell, Brown, Babson College, Tufts, and we put a lot of time into as members going, working on pitch contests there, possibly teaching courses on a variety of founder important topics like cap tables or data rooms or or how to do due diligence or what to expect in a term sheet and things like that. So the top of our funnel primarily feeds in through that. Our brand also is pretty powerful. We've been around 25 years. We're the largest seed investor in the New England region, even including venture capitalists. I mean, we've invested in over 150 companies, so we're quite active. And these days, we're putting 8 to 10 million a year to work, which really is an incredible amount for angel group as opposed to a VC. I mean, obviously, there's VCs that put more than that into a single deal every day. But as an angel group, it's pretty substantial. So we get, the founders do find us.
Mm-hmm. Okay, got it. So is it more the deals find you guys based off of your reputation? Is that the
I think
large driver?
Yeah, it's a little bit of that. It's also, you've got to be out into the ecosystem meeting these founders. And so there's a lot of nurturing that goes on by our members prior to companies coming to us. Like any group, we do have specific types of deals that we like. And so our members are out doing added value work in the ecosystem, but they're also scouting for us and putting some filters on to make sure it's a good fit for Launchpad. Our whole pitch is because we're different than VCs, we have 175 people that have networks that can help you find talent, can open doors for your early customers, and really make an enormous difference on human capital. And so we're looking for founders that really want that help and not just money. There's definitely founders are out there. I just need money. I know what I'm doing. Let me go. And then there's founders like, oh, I would love some help opening doors. I would love some help how to build robust financial statements. I need help finding talent. And that's kind of what Launchpad's all about. We have members that want to do those things. I'd say over 3/4 of our deal flow comes from member referrals, and the other 25% are over the transom. We definitely do some light marketing to make sure we have a wide net. In the past year, we've gone to short form video testimonials of founders that have had great experiences with us. We just capture the voice of the customer and let them tell the story to other founders about their Launchpad experience. And that's what we've been using just sort of as our umbrella marketing campaign. And we've primarily been doing it on LinkedIn as our primary outlet.
Mm-hmm. Awesome. Awesome. So what makes a startup a good fit for Launchpad besides its geographical location?
Yeah, so we are a subsystem of the region we're in. So we're going to see deal flow that we're in a strong healthcare, biotech, medical device sort of part of the United States. And so we see an awful lot of that stuff. And that's about 1/3 of our deal flow and 1/3 of our investments. That said, we are not interested in like pure drug discovery or truly anything that's going to require massive capital because we can't take on the risk of giving a few $1,000,000 to help a company get off the ground and then totally crossing our fingers that there's going to be 10, 20, 30, $40 million checks coming in for the next several rounds. So we look for very capital efficient deals that we can really make in our capital has a high impact and we're not the VC risk is significantly lower than high capital deals. So that's one thing, capital efficiency. Obviously, I mentioned the geofence is important to us. We only do New England and New York State deals, so we're Northeast focused. And then we also have a bunch of no-go zones. We don't do, I mentioned pure drug discovery. We don't do gambling. We don't do crypto. We actually are very cautious on DTC, and we have a hard no for food and beverage. There's a bunch of reasons I could go into that we just don't do those different things. Some of it is of our 175 members, we look at the skill sets and the background album, and we don't have a lot of background in those areas. So we want to go where our human capital can make a huge difference for the founders. And if we don't have any members that understand the crypto or blockchain world extremely well, we're not going to be added value.
Hmm. That makes sense. That's very smart. It's very wise. So I'm always curious, do you have any specific questions you ask potential um, startups that you would potentially fund um, to help you see around corners as you mentioned?
Yeah, so we're pretty comprehensive and it follows the outline of a general business plan. But the early startup investing, you can boil it down. It is what's the problem you're solving? What's the solution you're bringing to market? How is it going to be valued by the end user? Like, and you got to punch down on those three very hard. And then, is this the right team to go execute it? And is there enough white space? You do want to have an overlay of the competition. The thing that we run into the most that surprises founders and that we have to coach them through is the capital staging financial milestone piece because it's pretty easy to say, I'm going to do 100,000 this year and 500,000 next, and then 2 million, 4 million, 8 million, and I'm gonna break even. I'm gonna be positive cash flow in 3 or 4 years. I mean, it's not hard. ChatGPT can build that for you in 30 seconds. The question is, have you built it top down and bottom up? And can you actually link that back to how many contracts you're going to need? At what point you have enough contracts to reach the next milestone that will unlock funding for the next level of growth, et cetera. And so that comprehensive and how founders react to that sort of part of their story really shows us the depth that they're thinking about their problem, their business beyond just the problem solution. Personally, I'm very hung up on distribution. I told you my history with it. I mean, it is hard to get those first 5 or 10 customers. And then the question becomes, they usually start with pilots. How do you convert them into contracts? And then once you get up into those double digits of contracts, how do you plan to scale? Because you have to move off founder-led sales or your business won't scale.
Mm. Awesome, awesome. Are there any specific companies you're working with right now, or founders that you are excited about?
Well, there's always founders I'm excited about. I mean, I wouldn't give them money if I didn't believe in them. For me, it's a few of the different companies that I've seen and invested in. It's really a personal belief in the business problem. I invested in a company called Guidesley with a very dynamic CEO named David Lord. And when David first pitched, he sort of went over his history and he had scaled some very big businesses, incubated and scaled some very big businesses. So there I had the credibility of a been there, done that founder. And then I listened to him describe the business problem he solved, which was how do you find guides across the United States for fishing, bird watching, scuba diving? And the reality is, it's the wild, wild west of Google Ads, and you have no idea when you give them money, or if you, basically make a booking, are they going to actually show up? If you're, down in Florida and you want to go fishing with your kids, which was a real example for me, and here I am, driving to a boat ramp, hoping somebody's going to show up. That I have no idea if the handful of Google reviews were his brother-in-law just saying he's great, and so David was solving that problem. And I said, that is a really big problem. I would have felt so much better being on a known platform like Uber that you build this trust with, that you actually have reviews, you actually have payment processing, you actually have professional calendaring. And so I just told a story about one, but it's like that became a no-brainer to me. I believe in the problem. I believe in the solution, and I've got a founder CEO who's passionate, high energy, been there, done that. That's like, here's a check, let's go. That's one example. I'm pretty excited about an investment that we made earlier this year in a company called Cake, which is a high-end aspirational women's fashion brand marketplace. That's a mouthful. But if you think back to, if you're familiar or any of your listeners are familiar with Rue La La, which was this invitation only, you know, women's fashion brand that really scaled extremely. The same founder said, I think there's room for something at a even higher level of brands. And he said, but I need to make it in a walled garden sort of situation and get these brands to offer discounts that they won't offer anywhere else on the internet. So they, you know, these aspirational brands where it's $500 to $5,000 for a piece of clothing, they don't want to be discounting. They have to keep their prices high. And what Ben and the two co-founders, Estelle and Dave came up with was, we can get the brands to agree to discounts if we allow them not to be on the internet. In other words, they can't be seen. And the brands will come to us because they're already spending lots of money on client acquisitions, but we'll bring our cohort of $100 a year founders into this walled garden environment, allow them to shop in a safe place, build a unique experience. They will get discounts that they can't get anywhere else on the internet, and away we go. And the team, Dave and Estelle, and back to, you know, great people. Dave had built communities at WeWork, and this is effectively building a community. And Estelle was a former venture capitalist that really understood the nuts and bolts of building a startup from, you know, idea to scaling. And so I'm super excited about where Cake is going. So there's two examples.
Wow. Those both sound really cool. I would be particularly interested in the second one, so I'm excited for when that launches.
It's launched. It's
Oh, it's
launched.
launched.
Oh, it's
Okay.
launched. There's hundreds of high-end brands on it, thousands of end users. What's tricky is you do need an invitation, but people can go to the Cake website, and just put their name on the wait list because it is an invitation only type of thing. And it's a referral business similar to Rue La La. The difference being it's $100 per year, but then it's a little bit like the Platinum Amex. You get, you know, $500 or $1,000 of discount codes that you can't get anywhere else for the brands you're already buying.
Wow. Yeah, that's an amazing idea. Awesome. All right. Well, we are coming towards the end of our time together, unfortunately. I did have two final questions for you. I'd love to hear, you know, what your experience has been, you know, with impacting the communities of New York and New England with these startups.
Well, so we think our impact is broad. I mean, we spend a lot of time at the colleges educating and volunteering our time, and then sometimes, just allowing these young entrepreneurs to pitch. We allow, or we have over 100 companies pitch our group a year. So we are putting, formally through Launchpad, we do 5 to 8 new investments a year. However, we don't even count by putting 100 companies in front of the Launchpad members. Many of our members write $25,000, $50,000 checks into these startups that don't enter the Launchpad portfolio, but because we're showing them so many things, the reach is much broader than just the Launchpad portfolio. And we definitely, try. We don't require, but we try to make sure we're supporting female founders in the right way and minorities in the right way. And a third of our portfolio fit into, our female CEOs. A third of our members, by the way, are female also, which is a fairly high number for an angel group. So we think we're supporting the local ecosystem at the pre-seed and seed stage in a very meaningful way. And the one other thing I would add is we syndicate deals for like $1 to $3 million. That's like a spot that is underserved in the United States because it's too small for the VCs, but it's way too big for most angel groups. So we're really filling a unique niche.
Mm-hmm. Awesome. Awesome. All right. And my final question for you, Ian, is an open-ended question. You can take it in any direction you like, big, small, short, long. It is the name of the show. The question is, what are you working towards?
What am I working towards? Boy, you're going to get me pausing for a second.
Please.
Given I'm on this podcast, you would have think I would have already thought about that. Um, Well, I committed myself. I wrote myself a letter in the mid 90s at one of these corporate retreats that they mailed to me 10 years later and says, "What do you want to be doing 10 years from now?" And I wrote to myself, I want to be involved in a lot of startups, helping founders be successful and grow their businesses. And that was partly the epiphany when that letter came back saying, I got to go do this angel investing thing. So, what I'm working toward is, continuing to support founders. I love the Launchpad brand. Obviously, I agreed to help run the group. So I believe in the mission we're doing, which is founder friendly investing, supporting the local ecosystem. And so I'm working toward, doing my part to make our brand very important in the ecosystem, continuing the investment work that we do in the ecosystem, and setting Launchpad up for another 25 years of success, because I think it's less about the returns and more about the impact that we have helping the startups. Everybody doesn't have friends and family money to support their early ideas, yet these people have great ideas and they deserve someone out there to support them. And that's what we do. So, if I can continue the legacy of the good work that was started by the founders of Launchpad, I'll feel great about my time and what I'm doing today.
Mhm. Awesome. Awesome. And where can my audience find out more about you and Launchpad and everything you guys are working on?
So our LinkedIn group, Launchpad Venture Group, and then our website. But quite honestly, we don't have a regular news feed on our website, so you'll get a much better feeling through the LinkedIn Launchpad Venture Group site. That's where we post when our new investments, some of the exits, big news with our portfolio, as well as some testimonial stuff.
Awesome. We will link all of that in the show notes. Ian, thank you so much for taking the time. This was a real pleasure.
Well, thank you, Chris. It was my delight being on, and I'm glad you listened to me today.
Absolutely. All right. And to all our listeners out there, thank you so much for tuning in and keep on growing out there, everybody. See ya.